Do you have a lot of trading indicators on your charts, and are they affecting your trading? I'm going to show you my system that I've been using for the last 30 years here today. We're going to go to the charts. I'm going to show you a simple trading system that will make you profitable. And what we're going to do is we're going to do it without indicators, without all these crazy pulling the chart with all these different little systems and indicators and moving the stars and aligning the stars on the right to the left and whatnot. So come into the office. Let's go and have a look at trading with no indicators. Is it possible? Can we trade with no indicators? Yes, of course we can. Why do we need so many indicators on the chart? I'm going to show you a simple process that I've used daily that'll make you a winner, that'll make you into a profitable trader, at least make you a break-even trader. Because if you've been losing in the stock market, you probably find that you've been using so many different systems and so many different indicators to keep you going. Do you find yourself changing your system every 5 minutes? Do you find yourself tweaking your system every 5 minutes? Well, that'll be because you took a few losses in a row and you don't believe in your system anymore, because the system has let you down. It hasn't. What's let you down is you. You let you down. It's all about the psychology of it. It's all about getting your head around how the stock market works, because the stock market is a 50-50 game. If you take 10 trades, 5 of the trades will lose, 5 of the trades will win. The win in this is to lose 1 on every of the 5 trades you lose and to win 2 on every of the 5 trades that you win. It's like tossing a coin. If I offered you those odds, you would most likely grab those odds at every opportunity that you could get your hands on them, because those are good odds. And I always ask, if you were betting on a horse race and the horse that was winning was 100 meters from the finishing line, and I said to you, hey guy, I can let you double your bet on that winning horse right now, would you take it? Most likely you would jump at the chance and say, what a definite, I would definitely double my bet on that horse if I was allowed to. But if your horse was coming close to last and you were 100 meters from the finishing line, or the horse coming first was 100 meters from the finishing line, would you double your bet then? Well, that would be silly, because your horse is coming last, and do you actually believe that it's going to run past all those other horses and come first in the last 100 meters? Most probably not. Yet, you do that when you're trading. When your trade goes into a loss and it's in a bad position and it's invalidated and it's not a trade that you would ever take, what do? You add to the trade. You somehow call it hedging, or you call it breaking even, or trying to get your money back, or I don't know, averaging down. Or no, guys, that's not going to work. It's never going to work. It always lets you down. It might work for 1 or 2 trades. Don't get me wrong. There'll be 1 or 2 where it'll come back to break even and you'll be like, it's a relief trade. You'll get out at a relief, no profit, and walk away. But there's always that one that keeps on going down, that just keeps on failing, and it just won't come right, because the stock market can maintain much longer than you can, or the Forex market, or whichever market that you might be trading on, whichever instrument you might be trading on. It'll outplay you, and always will outplay your psychology every single time, because it's the fear emotion that kicks in. The fear emotion kicks in and it gives you the heebie-jeebies. You just cannot keep up with it. But as I said, we're going to go to the charts. We're going to have a look at a simple system of how you can trade without really using any indicators, or out putting all these fancy fandangled indicators on. And you know, the advantage of being able to trade this way has always been, I've never been too concerned about which broker I trade with, as long as they're reputable. I mean, just not some fly-by-night guy, as long as it's a reputable broker. But what I mean by that is, I'm not too concerned about what trading package they're giving me. That's not the be-all and end-all of my reasons for trading with any particular broker, because it doesn't matter what package they give me, as long as it's got charts and as long as it's got candles. I'm okay with that. And maybe I can draw a line here and there. I'm all right with that. I don't need much more than that to take my trades. Whereas other traders need all these fancy fandangled things on their charts so they can figure out what's going on, not realizing that 9 times out of 10, it's basically lagging indicators that are leading them in the wrong direction in the first place. But guys, let me not ramble on too long. Trading is risky. 80% of traders lose money, and I hope you know that. If you don't like risk and you don't like losing money, do yourself a favor, guys, and rather don't trade. And that said, drop down to the description and get your free Forex book, which I've got there for you. It's totally free. It's in a PDF format, but it is free. Enjoy it, read it, do whatever. It's all about trend. The trend is your friend. It's a good thing to know. Besides, you can visit the secret blog. Every day I put a trade idea out on the secret blog so that you can follow that trade and see what other people are doing. It's not trading advice, guys, just a trading idea. But while we're here, guys, let's go and have a look at the charts and let's go and see how we do the chart. Can trading without indicators be profitable? Can you trade without indicators? Well, let's have a look at this chart. No indicators, nothing on here. What do you see? We're on the 4-hour chart. And if you were on a 5-minute chart, no difference. It's really not that difficult. You just got to look at the structure that you've got here. What do you see? You see it coming along in a range here, breaking through what was its support, turning what was its support into now. This would become a resistance level. It's clearly level there. So there's your resistance level up there, and it's bounced all the way down. There's a nice little doji candle which is telling you that it's going short anyway, and straight down to this what became a support level down here. Now if you were to draw the support level in, you would clearly see that the support is here, and once again there's your bearish momentum, big candle breaking through the support level, turning it into a resistance, and then this carries on going down, and it's probably going to go back up to this level over here, which will be a new resistance level, allowing you to trade down. Now let's draw the levels in so you can see what we just did. Take it to the day chart, take it to the line chart like we always do, make it a little bit easier to see. We don't seem to have a support level lying around here, but we do have a new clean resistance level where it broke through. Now you remember it broke through at the top here as well, but I'm just going to draw this one in over here. Mind you, I don't know if I should maybe draw the top one in as well so you can see that, and you can see where it broke through. Let's do that just out of interest, but you don't need it there. But we're going to just show you what happened here so that we all know what's going on. There's your candles back in, everything's back in place, and we're going to take it back now to the 4-hour chart, giving us a much clearer picture of what on earth is going on. Okay, all right, so I made that resistance level a little bit too high, but that's okay. That's fine. There's a resistance level up here as well, which I must have missed out on the day chart. Let's take it back to the day chart and just see what happened there so we can understand better why we didn't put it in. Oh, it was a support level. That's why. You see here. Okay, this was a support level and it became a resistance level, and that's what I wanted to show you. So effectively, let's take that one out and let's draw what was a support level. Right. Okay, that's what I wanted to show you. So that was a support level, which became a resistance level. Let's take it back to the candles. Let's take it back to the 4-hour chart. Now, you know, we use the line charts because it gives you the closing prices and it makes it easier for us to draw the lines in if you didn't draw the lines. So you're supposed to be trading this without any of these lines in. Now, this was a support level and it broke through the support level and turned it into a resistance level. You see how it broke through clean here? Now, I would have taken the short right here and I wouldn't have waited for it to retest, and it wouldn't have been a problem because why? Because my stop loss would have been up here, so I would still be in the trade. Also, what we've got this running along here and boof, she goes down. There's a doji confirming it, so you could have taken the short even from this point as well. But this went back and retested about 3 or 4 times. You really don't have to wait for that. Like I say, I would have taken the short over at this level already. Then she comes down, hits the support level, and she kind of respects the support level, although it broke it over here, but it kind of respects this support level for quite a while. Keeps on going. You could draw this a little bit wider if you want to, because if you look at it, it does come down to this level here. So I mean, if you really want to, you can make it a little bit wider. It's not a problem. I mean, really, it's a really wide level in that case. But yeah, all right. So there's your major support, your major daily support. And in fact, what I might do is just make it a little bit lower here, bring it down to the tails, just to make it a little bit cleaner. Okay, now that is what was a support is now a resistance. You see, once again, you see it broke through the first one, and now it's broken through the second one. It did respect it about quite a few times, and at this point, I was actually looking at a possible long trade out of here, which would have been quite nice. But unfortunately, it didn't work out, and it broke through, and this became what is now resistance. Now what you're doing is taking a short. I would take the short at this level, and I actually did on this product. But if you're late and you're waiting for the retest, it
retested there already, but you can wait for it to go all the way back up and then go out at that point there. And this becomes now your new resistance. Unless, of course, it breaks back through, which is probably doubtful at this point, which if it breaks through, it'll carry on going all the way back to the top here. So at the moment, we're using this as a resistance. If you go to another product, I don't know, let's choose any old product and see what we got. This is the Great British Pound, the US dollar, and you're looking at market structure here. So you're looking for a level somewhere here for you to once again get another long trade out of here. This just basically becomes your support. You know, you got 1, 2, 3. It's basically in a bullish phase, and if you want to confirm that, simply draw a trend line through here and look at that. There's your trend line going straight up through there, and it's confirming to you that that's where you want to take your next trade. So you're not looking for a short here because it's like at an all-time high and you don't really know where it's going, so you rather wait for it to come back, test that, and then carry on going out. You don't have to wait for the moon or the stars to align, but you know, that's basically the trade that you're looking for.
So you've seen the charts, you've seen how we can effectively trade without indicators, without millions of indicators all over the charts. Now that's a fantastic charting package. It's offered by TradingView. There's a link in the description if you want to go and get those charts. Wonderful stuff. And I mean, but like I say, guys, I just use whatever the broker gives me. Those charts are really great if you want to see things clearly, if you want a lot of information on the markets, and if you want a lot of indicators on the markets. And the nice thing about them is they do kind of go worldwide. You can get instruments all over the world there, and most of the brokers overseas will deal with that particular type of package. If you like that sort of thing, then go and grab it. It'll work for you. But like I say, charts are not the be-all and end-all. If you use technical trading, you don't need to draw lines all over the place. You don't need to have millions of indicators on your chart. You just need to identify the market structure, which way it's going, how the market structure is going to work for you. The next video that I'm going to bring out, well, today is Wednesday, so most probably Friday, will describe market structure in more detail. I'm going to go into a little bit more detail on how market structure works and how you can identify market structure, and it'll help you in choosing the direction of your trade. Instead of trading against the market, you can trade more with the market, making you into a more profitable trader as always. With that, thanks for watching, guys. Don't forget to watch that next video, and don't forget to watch the last video. Till next time, cheers and bye.